Today, let's go over my top 5 Canadian monthly dividend stocks that you should consider adding to your portfolio. Hello and welcome back to my channel where we talk about investing, personal finance, and dividends. If you're new here, consider subscribing to my channel and lightly tap that like button if you enjoy this type of video. Let's get started. Dividend stocks are my favorite way of generating passive income. Some companies pay their shareholders dividends, and it's like an appreciation for investing in them. The companies make a lot of profit and they want to share a piece of that with everyone that has invested in them in making that happen. It's also a tactic to keep investors and to attract new investors to further develop the company. Many of you guys have asked in the comments, how do I know if a company pays dividends? Well, it really depends on the company. For example, TD pays dividends to its shareholders, while Shopify does not pay dividends to its shareholders. One way to quickly check if a company pays dividends or not is to search the company you're looking for on Google and add the word stock right beside it. That should bring up a price chart and some basic financial numbers. If you see a number for dividend yield, then they pay dividends. For example, TD, it says the dividend yield is 4%, so they pay 4% dividends over the course of a year. And if you check Shopify, there's no number in the dividend yield field and it's blank, which means they do not pay dividends. Shopify would be considered a growth stock as they do not pay dividends but increase in value over time, and TD would be considered a dividend stock as they focus more on paying dividends. Some of you also asked in the comments, how often do stocks pay dividends? Well, that also depends on the company. Most companies pay dividends quarterly, which means every 3 months. For example, TD here pays 79 cents per stock every 3 months. There are some companies that pay dividends monthly, and in this video, we'll take a look at my top monthly dividend stocks. I'm still the same random guy on YouTube, not a financial advisor. So if you're interested in any of the stocks that we're going to mention in this video today, be sure to do your own research before you invest in them. Let's take a look at the first stock on the list, PZA, Pizza. They make pizza, cook pizza, and sell pizza. As a university student, I lived off of Pizza and Tim Hortons. They were the cheapest meal around the campus. It has a dividend yield of 6.7%, which means every $100 that you invest in Pizza Day, you'll receive $6.70 every year. Pizza has increased its dividends every year consecutively for 9 years before the pandemic, and it took a small cut during last year and is slowly recovering back. And it has a dividend growth of 2%. It's pretty much a staple for students and whenever people want cheaper pizza. I still get pizza from there from time to time. Pizza has a payout ratio of 74%, which means they use 74% of their net income to pay dividends to shareholders like you and me, and they reinvest the other 26% back into the company to expand and grow. A payout ratio around 60% is considered healthy, as they're sustainable enough to pay us dividends and grow the company at the same time. Next on the list is REI.UN. It's a REIT, which stands for Real Estate Investment Trust. They own a bunch of property that they rent out and collect money. It's a great way to gain exposure to the real estate market with little money. They help build Tanger Outlet across Canada, they own multiple shopping complexes, and they're expanding. They own about 38.3 million square feet of property across Canada, and their biggest tenant is Loblaws. It has a dividend yield of 5.6%, and they've paid distributions for 23 years straight, and they've increased it every single year. Then in January, they cut their distributions by 33% to focus more on expanding, which means their streak of 23 years of paying distributions and increasing it every single year is gone. Even with the 33% distribution cut, their dividend yield is still 5.6%. It's still desirable to buy into this company knowing that they can handle the distributions payout in the future, and they have exciting projects coming up as well. It has a payout ratio of 69%, which is low compared to other similar REITs. Next on the list is PPL, Pembina Pipelines. They provide transportation for oil, hydrocarbon liquids, and natural gas products produced mainly in the Western Canada. They've been providing service for the last 65 years. They have facilities that process and distribute natural gas to customers across North America through integrated pipelines and rail transportation. Part of their revenue comes from storing oil and natural gas. They're also trying to develop a hydrocarbon production facility in the near future. It has a dividend yield of 7.79% and it has a dividend growth of 5%. They've paid dividends for 21 years straight and they've increased it every single year for the past 8 years. It has a payout ratio of 59%. Next on the list is NPI, Northland Power. It's an independent power producer. It strives to develop, operate, and produce clean and green power. They've been in business for 33 years, and they provide electricity from renewable sources like solar, wind, and hydro. Green and renewable energy is the way to go for the future, as we do not want to emit more greenhouse gases in the process of generating energy. Kind of like how we're moving towards electric vehicles, as they emit fewer greenhouse emissions compared to regular cars. Oil and gas are still a big part of our life, and it's going to take a while before we can completely switch to green and renewable energy, but we're slowly getting there. They're currently operating in Canada and Europe, and they have future plans to expand all over North America. It has a dividend yield of 2.84%, and it has a dividend growth of 2%. They paid their dividends for 17 years straight, and their payout ratio is 65%. Next on the list is SJR.B, Shaw Communications. It's a company that operates wireline and wireless communications. They provide services like telecommunication, cable, internet, Wi-Fi, mobile services, satellite video, and fiber optic networks to all Canadians. They also provide wireless services like voice and data communications for Ontario, Alberta, and British Columbia through their subsidiary Freedom Mobile, which used to be called Wind. Since 2013, they've invested nearly $30 billion to build, upgrade, and expand their fiber optic networks, as well as their fast LTE networks and services. It has a dividend yield of 5.35, and it has a dividend growth of 2%. They've paid their dividends for 24 years straight, and they have a payout ratio of 89%. You should take a look at these awesome companies and see if you want to add them to your dividend portfolio as well. If you like this video, you should also check out my top 10 Canadian dividend stocks video. As always, make money work for you, not the other way around. You can check out Wealthsimple Trade and start investing today. I have another video that walks you through the setup. I'll leave my referral link in the description box below. If you use that link to sign up, fund your account $100 and buy some stocks with that, you'll receive $10 and I'll receive $25. Let's take personal finance into our own hands and make our money work for us. If you enjoyed this video, be sure to smash that like button and hit that subscribe button for more content like this. Bye!